Pam Danziger is the president of Unity Marketing, and she's the author of Putting the Lux Back in Luxury. She joins us now from Lancaster, Pennsylvania. Ms. Danziger, welcome to Bottom Line. Appreciate your time today.
Well, thanks a lot, Mark.
Talk to us about who is spending and who isn't right now.
Well, you know, there is a lot of noise out there about the return of the luxury market, and we've had some recent results from Saks and Neiman Marcus and Louis Vuitton that really seem to confirm it. But those results, those positive financials, are really telling us about the companies and how they're managing their business in this current environment. They're not telling us anything about the luxury consumers. And when you do research with the luxury consumers, you find out there is a lot of concern and a lot of hesitancy out there. In fact, in our last survey in April, just a month ago, with 1,300 affluent consumers, we found that more than two-thirds believe we are still in a recession. So that is cause for a lot of concern on the part of marketers.
Interestingly enough, because I guess you have coined a phrase that I read in one of our Bloomberg stories, and it's called Henrys. Please tell our audience who Henrys are.
Yeah, well, you know, when we look at the demographics of affluence, there are only two income segments we really need to worry about. One is the ultra-affluents. They're the top 2% with incomes of $250,000 and above. And the other segment is the Henrys. They are the high earners, but they're not rich yet, with incomes from $100,000 to $250,000. And it's those Henrys that have really been holding back. And if we think about these people, they look at themselves, they're high earners. They make more than 18% of all the households in the economy, yet they still believe that we are in a recession, and they are thinking like middle-class consumers, certainly not like affluents. And they're being very hesitant to go back into the stores and pay full luxury prices when it comes to their shopping.
What exactly is constraining these shoppers, these Henrys? Is it housing prices? Is it the rising price of gas? Is it the unemployment rate, or is it a combination of all three?
Well, it's really everything that is going on. And if we think about people, you know, again, they're at the top 20%, $100,000. Their average income in that whole top segment is $170,000. Now, that's a very comfortable lifestyle, but that hardly gives you enough money to be able to afford, you know, $16,000 for an Hermes bag or a $1,000 pair of shoes. So these are consumers who are really just trying to keep their lifestyle. They're not going to put it at risk. At the same time, they are trading down as opposed to trading up like they did during the pre-recession run-up in the luxury market.
So do we see some of the stores in the luxury market adapting as well to the clientele that they know were loyal to them before the recession and want to continue to be loyal, but they just don't have as much discretionary income?
Well, you know, that is what's really interesting, because if we look at Saks and we look at Neiman Marcus, again, their results are very, very positive right now. But those stores are very different if you shop there today than they were in 2007 before this recession. These stores have adapted to the new environment. They've adapted to a new values-oriented customer. And that in that adaptation, they've attracted people back. They've lowered their starting price points. They've changed in and brought in new brands. And both Saks and Neiman Marcus are banking a lot on their off-price discount outlets, which are, again, appealing to a Henry shopper, someone who's affluent but not rich yet.
Pam Danziger, president of Unity Marketing, joining us from Lebanon, Pennsylvania. Ms. Danziger, thanks so much. We appreciate your time today.
Thank you.